Hello and welcome. Today, we are diving into something that is, and I'm not exaggerating here, absolutely critical for contractors, freelancers, and yeah, even landlords all across the UK. We're going to unpack HMRC's Spotlight 63, a warning that comes with some seriously high financial stakes.
Now, this whole guide has been put together for you by the experts over at Pro Tax Accountant. They are on the front lines seeing the real-world impact of these tax issues every single day. So they're here to help bring the clarity that you're going to need. All right, let's get into it.
Just let that sink in for a second. Imagine the very advice you paid for, thinking you were being smart and financially savvy, could actually end up putting everything you've ever worked for at risk.
Look, this is not some scare tactic. It is the cold, hard reality for thousands of people who've been caught up in tax avoidance schemes, and HMRC is coming down on them hard. Their main warning shot across the bow? A publication called Spotlight 63. Our goal today is to make sure you know exactly what that means for you.
Okay, so first things first, let's talk about the trap itself. These schemes are often dressed up to look like brilliant, totally legitimate tax planning. But as you're about to see, the whole thing is built on a house of cards that HMRC has now completely blown over.
So the big idea here is something called disguised remuneration. Sounds complicated, but it's pretty simple. Instead of getting a regular salary and paying your income tax and national insurance like everyone else, your pay is disguised as a loan. You might hear them called contractor loan schemes or employee benefit trusts. It's all the same trick. You get paid, but the taxman sees nothing because on paper, it's just a loan. But here's the catch, and it's a big one. Nobody, and I mean nobody, ever intends for that loan to be paid back.
Now, just look at how simple and, well, how tempting that looks. Let's paint a picture. You're an IT contractor in London, pulling in a fantastic day rate. A promoter slides in and says, "Hey, why are you giving away 40% of your earnings in tax? We can fix that." So you do the work, the payment gets routed to some offshore trust, and then it comes back to you as a tax-free loan. All of a sudden, your take-home pay skyrockets. It feels like you've found a secret cheat code for money. But that feeling? That's the bait.
And this is precisely why it's an illusion. HMRC didn't just disagree with this stuff. They dragged it through the courts and they won. Again and again. The really famous case was with the Rangers Football Club. It went all the way to the Supreme Court. The final ruling was a bombshell. It said, it doesn't matter if you call it a loan, a biscuit, or a spaceship. If it looks and smells like income, it's income and it's taxable. That one case basically gave HMRC all the ammunition they needed.
And all that ammunition led directly to their most powerful weapon, the loan charge. Stay with me here, because this is the part where the real danger becomes crystal clear. This is where a theoretical tax issue turns into a life-changing financial nightmare.
You can see this wasn't a snap decision. HMRC played the long game. They focused the charge on any loans made after December 9th, 2010. Then in 2017, they made it law. And on April 5th, 2019, the hammer came down. Every single one of those outstanding loans became taxable, all at once. And right now, as we head into the 2025-26 tax year, HMRC's enforcement is only getting more aggressive.
Let's make this hurt a little. Let's go back to our IT contractor in London. Let's say over, 7 years, they got £500,000 in these so-called loans. The loan charge rolls up all those years of untaxed income into one single, massive, terrifying bill. A bill for £200,000 landing on your doorstep is not unusual. It's an amount of money that can completely derail your life, especially if you thought everything was fine.
And here's a quick pro tip, because this is a lie that traps so many people. The promoters love to say, oh look, our scheme has a DOTAS number. It's all registered and above board with HMRC. Sounds good, right? It's completely wrong. A DOTAS number isn't a badge of approval, it's a mark of shame. It means HMRC already suspects the scheme is dodgy and has forced the promoter to put it on a watch list. It's a massive red flag, not a green light.
So the loan charge was a body blow to the old contractor schemes. But the story doesn't stop there. These promoters are creative and they've found a new audience. And that's not all. Here's where HMRC is focusing its attention right now. Spotlight 63 has been updated to specifically warn property landlords about a brand new and equally broken scheme. For a landlord, the pitch is like a dream come true. They say if you just set up this fancy hybrid partnership and pop your properties into it, you'll slash your income tax, cut your capital gains, and even dodge inheritance tax altogether. But HMRC's reply is short and brutal. No, this arrangement does not work. They have a whole arsenal of laws ready to blow it to pieces. And this is the legal arsenal they use. It's a complete takedown. First, they use something called the mixed member partnership rules to just pull the profits straight out of the company and tax them as your personal income. Then other rules say that rental income is still taxed as, well, your income. That capital gains tax saving? Nope. The property's value for tax purposes doesn't magically reset. And inheritance tax relief? Forget it. The law says property rental is an investment, not a trading business, so it doesn't qualify. Oh, and to add insult to injury, you might accidentally create a massive stamp duty bill just by setting the whole thing up. Every single promised benefit just evaporates.
Okay, I know hearing all that can be incredibly stressful, especially if any of it rings a bell, but it is so important to know you're not powerless here. Let's switch gears from the problem to the solution. There is a way out of this, and it all starts with understanding your rights.
The taxpayer charter is there for a reason. HMRC has to treat you with fairness and respect. You have a fundamental right to appeal their decisions. And, this is a big one, if you do owe tax, you have the right to ask for a payment plan, what they call a time-to-pay arrangement. They do not expect you to find a fortune overnight.
So what do you do if you think you might be involved in one of these schemes? Step 1. Do not bury your head in the sand. Waiting for that scary brown envelope is the worst thing you can do. Step 2, and this is non-negotiable, get independent professional advice. The person who sold you the magic beans cannot help you get out of trouble. Step 3, you need to talk to HMRC. They have a special email address just for this. And finally, step 4, get out of the scheme formally and get your taxes back on the straight and narrow.
And that brings us to the final, and honestly, the most important point of this entire discussion. Knowing there's a problem is one thing, but actually fixing it, that's a whole different ballgame.
If you take only one thing away from our chat today, please let it be this. The tax laws are a minefield. The financial stakes are through the roof, and the stress is just immense. Trying to go up against HMRC by yourself in a situation like this is, without a doubt, the single biggest risk you can take. And that is exactly why professional help isn't a luxury. It is an absolute necessity. A firm like ProTax Accountant has the deep expertise to pick apart your situation, figure out what you actually owe, and then go and negotiate with HMRC on your behalf to get the best possible resolution. They are the guides who can lead you out of the woods.
So if anything we've talked about today has made you feel uneasy, please don't wait. You can reach out to the team at ProTax Accountant right now. The details are up on the screen. A confidential phone call today could genuinely save you a world of pain, stress, and money down the line.
And that leaves us with one last question to chew on as we look to the future. These particular schemes are under the microscope today, but the principle of paying the right amount of tax never goes away. So, are you truly confident your affairs are ready for HMRC's scrutiny?
Thank you so much for joining me for this breakdown. To stay on top of crucial updates just like this one, and for more essential tax insights, make sure you hit that subscribe button for the ProTax Accountant YouTube channel. Stay informed and stay safe out there.